Hey there everyone, Trader Tim from eminimind.com doing a trade recap video for today. It's Thursday, December 6, 2018, and big day today. I had two trades, one short and one long, and they both took off. And so I wanted to walk through those two trades as well as kind of my thought process that took me into those trades. And then we were talking about in the Tuesday trading room just a couple of big picture things, some changes I was making to some of my longer term portfolio stuff, and kind of update you on that as well. So on the daily chart, not a lot has changed in terms of this retracement short. It's still up here at the 74s. You can see how we've traded into it three times now with Monday's gap up. We talked about, I was saying in the video Monday, that when we have a gap up at highs, that's usually a weak sign. It's not a gap to buy. A gap up coming off of a downtrend is the gap that you want to buy. So, uh, following Monday, we had the big sell off Tuesday, markets closed Wednesday, and then today forming the um, kind of a hammer reversal bar. And you'll see I've marked this morning. I had marked the 2627. That was the swing low, just the prior swing low. And when you get in these situations where you have a big range bound market, you gotta watch out for these dips below the prior swing low, and then just a rip roaring rally after that, kind of flushing everybody out, and then the market turns around and starts ripping higher. And so we'll zoom in here on the 512 and talk about that particular situation and another trade I took here today. So let's start. I guess before we get into the day trading stuff, so Tuesday I was talking about on in the trading room that I wanted to get out of some of these longer term positions, mostly stuff that was in my IRA for a little while now, last couple of months. I wanted to get rid of a bond fund that I had, and a couple other things that I just accumulated over the years, and I wanted to consolidate a little bit and move into some newer funds. A couple of the funds started kind of lagging a little bit in the last year and a half, so I felt like it was time. And so on Monday, on the gap up, is when I sold and cleared all of that stuff out. And then I bought a little bit, like a quarter of my new position today, and then I'll just kind of build that back up with what was in the funds is now in cash, and then I've already got it kind of mapped out. The percentages I'm going to put in the dollar amounts into each ETF is what I'm using. And I'll just kind of wait for a few more dips to occur, but I wanted to get a little bit in just in case we get kind of a end of year rally, and I can take advantage of, a little bit of that jump, some of the dividends and things like that. So it's not going to make a huge difference, but that's kind of how I utilize how I use my trading skills to kind of manage some longer term positions. So, by being a little bit diligent with closing positions and putting on new positions, it could be a couple $1,000. It's not going to be hundreds of thousands of dollars difference, especially over 20, 30, 40-year period. And for those of you that are already in that retirement stage and trading is kind of your hobby, you know, I won't worry about too much trying to cycle out of funds and move money around. Um, if there's something that's really dogging in your portfolio, you may want to get rid of it. But at this point, if you've amassed, you know, close or upwards of $1 million, um, you really don't need to be micromanaging um, some of the various funds. You're better off just kind of letting them do its thing and let the market do its thing, and over time it will just kind of even itself out. So let's dive into today. Here on the right, my 512 tick chart. I'm gonna zoom in a little bit. At the open, we gapped down, and then we had this V right in the first 10 minutes or so, and I drew up the low to high. That was kind of 15 minutes into the morning here, and it was gonna be. I didn't really know what to expect today. All I really could tell was that we're gonna gap down, and that's about it. But I was very, very aware of this 26-27 swing low. So in the back of my mind, I kind of was looking for or watching for that sort of dip below the swing low and then a reversal at that point. And if you go back to like January of this year, we had a lot of that where like on this day here, we dipped below the prior swing low and then we rallied that same day. Back here, we dipped below this prior swing low, and then we rallied, following the next day, and then pushed up from there. So it happens quite a bit, even if it's not like this day here was a gap down, and we dipped below the prior day's low, and then pushed back up. It was enough to flush traders out. Same thing, back here. You kind of move down far enough to flush all the orders out, and then there's no more sellers. There's no more sell orders, and things can really start to move to the upside. So that was kind of my bigger thought on the day. But that was really about it. I didn't know how the intraday was gonna play out. Tuesday morning started really challenging, tough, choppy, whatever you want to call it. Tuesday morning here, the first couple of bars were very small relative to the rest of the day, and then it had topping and bottoming tails, so it was pretty range bound. And then we kind of fell off the cliff, and then Wednesday was markets were closed, and so today we kind of started that same way. We had a topping tail, bottom tail, and the first two 30-minute bars. Next candle didn't do a whole lot, but you'll see the fourth candle is the one that dipped below that prior swing low, and then we went pretty much straight up from there. A little bit of sideways movement in the afternoon. So starting the day, I drew up the first retracement long. I noted that the first retracement short just blew right through. So there was a little bit of potential for bulls at this point, just seeing that the short failed right off the open. I didn't I don't look at placing a blind limit order like a resting order right at a 50% long like this. The distance between the 50 and the 60-1/8 is very big, so my stop of 6 ticks would easily be taken out. But if we stop there and we bounce, then I'll just come in here and take a little long at the 50%. Was watching the tick chart. I ignore the first minute of tick reading extremes just because they're typically very extreme on these days, and it's so early in the day that it's not very useful. So I just kind of ignore those. And I was looking up here for maybe some high ticks and things like that. But we ended up coming down and not really stopping at the 50% and just kind of trading through it. And so when I saw that, like this nice string of retracements here, just coming down one after another. I didn't take these first three because we were coming into the long, but once we broke the 60-1/8 here at 56s, then what I like to do when we fail a 60-1/8 and we're in a nice trend like this, I'll just come back up to the swing high before the 50 So this is the point where we were still above the 50% retracement, and then grab to the swing low after the 61.8. So above the 50, below the 61.8, and take that as a short because the long failed. So now I want to be looking at shorts. So I took that as a short, rode that down to here, where this broke the swing high and kicked me out of the trade. And it doesn't look that big, but when you start looking at the numbers here, a 56, 50 down to a 46.75, that was a pretty nice trade. 10 points in a matter of, it was only like 5 minutes, 4 or 5 minutes. It was not very long. So that was a good one. And then we got a little bit of a bounce, and it got really messy. And I didn't want to try and I just wanted to stay out of the chop. And so I chose to. I was kind of thinking, okay, well that might be my only trade for the day. There was a one little long here after we broke the swing high. Um, it got a little bit of movement, but I didn't take this one, and it ended up you had this spike down and the spike up, and it was kind of sporadic, and we saw a little bit of that on Tuesday. These little, spikes that happen just it would seem like randomly. Um, so I was kind of planning to sit tight, but then as we started to get a little bit later in the morning, we started to drift lower, and we were kind of coming into this 26, 27. So once we broke that, it was about here, right about here, that we broke it. I was looking for maybe a low ticket lows and a break of the swing high, and we kind of had both of those. There were a lot of extreme low ticks today, and sometimes on very strong trend days, you'll get a low tick, and then you'll make a new low. Then you get another low tick, and then you make another new low. And so they're they're not as definitive, I suppose, but because the context on the larger time frame was such that we broke the swing low, then that was kind of my key to be looking for a long if we broke a little swing high. And so this was essentially the first long. I actually ended up using this swing high here that broke this prior swing high. So this guy here, we pulled back. It was a 23.75 long. And then I ended up scaling out quite a bit over the course of the trade. So we started, moved up. I ended up, since we kind of moved up through the negative 61.8 even, I just drew the next swing low to high and used the 61.8 as my trail. And then do that again, low to high, trail the 61.8. I left, this is where I started splitting up my trail stop. So I took a little bit off, just a tiny bit so one thing to note on longs like this or counter trend trades, you don't want to take very much off at the negative 23, like that first target. If you have two contracts, you got to take one off, no big deal. If you have three, I would also take one off. And even if you're trading 5 or 6, you might still only take one off because the idea here is that you're getting in a long that could easily go 10 points in a matter of minutes. So I only took a very small portion off there at the negative 23. And then up here, as it was at this point, I drew the next retracement, swing low to swing high. And I split up my stop. I left half back here. Get rid of some of these. I left half down here at the swing low because on this pullback, this is still the prior swing low. So I left half here, half under the 61.8 at 31, I think it was 31 and a quarter is what I ended up using. And I got taken out right to the tick on half of that up here at 31 and a quarter. But I had the other half of the position stop was still down here. So then once we got moving again, broke this high, took out the prior swing high. That was my signal to move up my stop to here. And then I just continued trailing, developing 61/8, so putting my stop underneath the 61/8 here, draw out the next setup, put it underneath the 61/8, and then we started moving very very fast, and I switched to trailing each candle's low just by 2 ticks. So I was coming in here, and these are happening like in the matter of seconds, and I'm just okay, move my stop underneath the candle's low. So what ends up happening, like as I hover over this candle, 26, 39, 15. So you got to round down 39s and then subtract a tick, 38, 75s. So it's really just a matter of, one hand on the mouse, and every time like these 4 candles, the highs all line up. So I just leave the stop below the candle that has the lowest low, and then it breaks out, and I move my stop up again. So you have a little, a few seconds of kind of not having to move your stop, but then things really start moving quickly, and then I ended up getting taken out at 46. It was actually 46.50, or I'm sorry, 45.50 is where I had my stop. So another one, 45.50 with say a quarter of the position left. I had a quarter of the position. I got ticked out down here at 31.25. Um, and then a little bit at the first target for just a couple of points. But so I guess a third, and or give or take a third, and a third, roughly. And so by having the ability to scale out. So if you're on a practice account, it's really good to be, even if you go from practice account, then you need to start with one contract live, but it's good to practice with like 2, 3 is better, 3 contracts, because you have the ability to take one off at the first target and then trail using 2 different methods. And so, you know, by trailing your stop, it really makes the difference in profitability. So 24s all the way up to 44s. I mean, that was a huge trade, and all because I kind of came into the day with some key levels noted on my chart, and just historical knowledge of what's happened before in these kind of situations. Obviously, every situation's different, but it's just a good way to use. That's how I use the larger time frames to execute on the smaller time frames. I'm using mostly the larger support and resistance levels, and then when those levels break, then I can look for trades in the 512. So even in this huge day, ES 78-point range, I'm still getting in these trades with a 6-tick stop. And so you don't have to adjust for volatility. You don't have to double your stop size or things like that just because the volatility is a little bit higher. So I hope that was helpful, kind of some insights to my thought process for today, as well as my longer term portfolio. Um, I'm using the Vanguard funds, but there's plenty of good funds out there. So if you have questions or want to talk specifically, I'm not a financial advisor, but I'm happy to share what I'm doing and what's worked for me over the last decade or two. So I hope everyone has a great weekend, and we will talk to everyone next week. Thanks, everyone, and take care.